You often see this advertisement by Moomoo Singapore offering us 6.8% per annum guaranteed returns and wonder if it's even real. I've been recycling my spare cash with their Cash Plus funds multiple times since last year. Let me break down how the returns will look like for you guys. And to give you guys a disclaimer, this video is not sponsored. I'm going to share with you the returns on my latest cycle based on the deposits, how much return I've gotten, the mechanics behind it. And to answer the most common questions I've gotten in my DMs, what exactly is the difference between this fund and this fund? Let's dive straight into today's video. Let's go. To any one of you who is new to money market funds, I must say that it is unlike placing your money in a bank savings account, one in UOB, DBS, OCBC, etc., where they are SDIC insured up to $100,000. Meaning, if anything happens to the bank, you at least get back $100,000. But when you place funds in money market funds, there is no insurance. It is not backed by the government or anything like that. It is an investment. But when you compare it with other investment instruments like bonds, individual stocks, etc., money market funds provides you with the lowest risk of them all, which is why their returns are comparable to only bank savings account rates. They aim to provide you with some form of liquidity at the end of the day. I will break down to you what are the holdings inside Fullerton's cash funds, both of them, later on in today's video. But if you take a look at this list right over here, coming in at the bottom is the lowest risk of them all, and then when you have other investment instruments like your individual stocks, cryptocurrency, that is the highest risk that you can invest your money into. So where does money market fund rank? It is a level above T-bills, SSB, fixed deposits. Money market funds provide you returns similar to your bank's savings account without you having to fulfill things like salary crediting, spending on a credit card, saving with the bank. The list goes on as to how high of a risk level you can go and take and also earn you the higher returns. But today, we are only covering money market funds, specifically the one on Moomoo Singapore's platform, Fullerton SGD Liquidity Fund and the Fullerton SGD Cash Fund. Similar to one another, just that one has the word liquidity, and we're going to cover the difference between the two right now. I know some of you are wondering, why am I placing my money here when the returns that I'll be getting is similar to bank savings account rates? The reason behind it is that this is a good instrument that can help you diversify your risk when it comes to your investment portfolio, and this is what it does for me. I hold bonds, I hold T-bills, I hold Singapore Savings Bond, etc. I also hold this money market fund because of the 6.8% per annum guaranteed returns. It is guaranteed for the specific promotion date, so that is why my money is here. So the Fullerton SGD Liquidity Fund, as the name suggests, provides you with liquidity, more liquid as compared to Fullerton SGD Cash Fund. And the Liquidity Fund is exclusive on Moomoo Singapore only. If you deposit before 9 AM, your returns will start calculating on the same day and it will be reflected in your app the next working day. As compared to the Fullerton SGD Cash Fund, if you deposit today before 12 PM, the next working day, they will start calculating the returns, but you wouldn't see in-app until 2 days from the day you have deposit. So if I deposit today, a Monday, I will only see it on Wednesday. So I've missed out 1 day of returns. That's the difference between the two. Withdrawal works the same way as well. If I submit the withdrawal today at 9 AM for the Fullerton SGD Liquidity Fund, I will get back my money on the same day before 8 PM, and that way I will not be losing out on a day's interest for the capital that I have withdrawn. I can put this back into my savings account that will earn me maybe 4% or 3%, etc. As compared to the Fullerton SGD Cash Fund, if I submit the withdrawal before 12 PM, the money will only be available in my account for withdrawal the next working day before 8 PM. So you are losing out on 1 day's worth of returns that you could get based on your capital amount that you are looking to withdraw. That's the difference between the two. What is invested in this fund, there is some form of difference as well. Let's go into Fullerton Fund Management Factsheet and I'll show you the top 5 holdings for both of them and you'll see the difference. You can see on screen right now, this is the fact sheet that I found on Fullerton Fund Management website. It's transparent, you can download this, keep a copy, understand a little bit further. It's also available for you to retrieve from Moomoo Singapore's app as well. I'll put the links down in the description box below. On the left is Fullerton SGD Cash Fund, on the right is the Liquidity Fund. Inception date of the Liquidity Fund is 4th of December 2023, relatively new and exclusive on Moomoo Singapore. Fund size is currently at $351 million. As compared to Fullerton SGD Cash Fund, they have been around for a pretty long time. 3rd of February 2009 is the inception date, and they are currently managing $5264.8 million. What comprises of this money market fund investments? Scroll all the way down and you can see the top 5 holdings for both of them. The liquidity fund is in MAS Bills and Qatar National Bank, and you can see the various percentages it holds as well. MAS Bills is not available to us as individuals. What we can buy in is Singapore Savings Bonds, T-Bills, SGS, but MAS Bills is only for companies, corporations, etc. Placement period, as you can see, it's less than or equal to 4 weeks. 98% of its holding has this maturity period, and that is how they can provide us with the liquidity, same day deposit, same day withdrawals, same day returns calculated. Whereas the SGD Cash Fund, the top 5 holdings is in banks. You can see that there is Sumitomo Mitsui Trust Bank, Qatar National Bank, MUFG Bank, Mizuho Bank, and the Bank of Nova Scotia. Understand what is in the fund, so this way you can get some form of confidence as an investor, a level of certainty and a level of belief that it's highly unlikely that it will go to zero. I'm not saying it's 100% certain. As with every other investment, there's no 100% certainty that your investment will not go to zero, but you know that with what they're investing into, the kind of risk level you are being exposed to. Similar to like how in the past I didn't understand what cryptocurrencies were, invested in it right through the highs and the lows, cannot take hit anymore, and I sold away everything. It's not a very good comparison, one being in the highest risk of them all and money market funds being the lowest risk. Not a very good comparison, but you get what I mean. If you don't understand what you're investing into, you will always ask yourself at the end of the day, will my money go to zero tomorrow? Read the fund fact sheet, understand what it's all about before you place your money in here. Now let's go into the recent cycle that I've placed my money here and how much returns I've gotten for 60 days. Let's go. Because the returns are guaranteed, it doesn't matter which fund I choose, but obviously I will be going with the SGD Fullerton Liquidity Fund because I can do same day deposit and same day withdrawals. That way I wouldn't lose out on 1 day's worth of interest or returns depending on where I put my money after fulfilling the promotion period. On a total capital of $200,000, this is the existing user promotion previously. Right now there's no existing user promotion, but there's one for new users. Up to $80,000 SGD for 30 days, you can earn the 6.8% per annum guaranteed returns. $200,000 was my capital. Fund returns from the liquidity fund was $1,187.41. Top up from Moomoo to make it 6.8% per annum was $981.06. So my total returns I've gotten was a little above 2.1 thousand. As the 60 days was running, I did make some withdrawals, so my return isn't exactly 6.8% per annum, but it's at 6.6%. This is the table breaking down to you. 23rd of April was the day I deposited. Because it's the liquidity fund, next day I will start seeing the return. So 24th of April was $32.36. Weekly returns was at $58. And the one in orange, on 21st of May, I did one withdrawal. 28th of May, I placed back the money. But if you have just left the money untouched, your returns is 6.8% per annum. This is still available for new users to Moomoo Singapore on a maximum deposit of $80,000 SGD, minimum anywhere above 1 cent. For a period of 30 days, you will enjoy the returns. You can choose these 3 funds available. The reason I didn't choose the USD fund, even though they provide a higher return, is because I didn't want it to be exposed to currency fluctuation. And yeah, if you want to sign up, you can use my sign up link down in the description box below or scan this QR code right over here. As a new user, you are getting up to $1,034 in sign up rewards. Summary is on my website. The step-by-step guide on how you can fulfill everything is also broken down on my website. Again, if you want to sign up, there's also a $20 exclusive using my link or scan this QR code right over here. If you have any questions, my Instagram DMs are always open, and I hope this gives you some form of clarity, understand what is in this investment. And that's all from me today. I'll see you guys in my next one. Bye bye.